Hey, welcome back, everybody. And question of the day is, have we actually become more of a buyer's market for the first time since 2013? Well, we're going to talk about that. We're going to talk about some other metrics. Let's get the show on the road. All right. So there's a number of things that we want to keep in mind as we are going through the metrics, because there's a lot of information that is being thrown out there in a lot of different areas. And they're talking about more hyperfocal areas, kind of like we're going to talk about our hyperfocal area here. And one of the key things to keep in mind, one of my favorite statements is, minds, like parachutes, only function when they are open. And what I'm asking you to do today is, hey, take some of those biases that you've been listening to, take some of that media sensationalism. I want you to put it aside. I want you to actually kind of take a look at the metrics, because everybody says, George, you're like always a glass half full kind of guy. And yes, why? And they say, how is the real estate market doing? Well, the real estate market is actually doing quite well. And it is on both sides of the fence for buyers and sellers. But there's always an opportunity. As an example, first-time home buyers are taking 34% of the market right now. Now, first-time home buyers, for those of you who are not aware, they actually will start a trend into a transitioning market, and they are indicating when a transitioning market is ending. So they're at both ends, and they happen to be at 34%. If they were at 38%, I would definitely say we're in a transitioning market, okay? Now, you might say, okay, George, that means that the market's tanking. No, not at all, because what's not so great for somebody over here might be really good for somebody over here. As an example, if there are more homes available and sellers aren't able to push that price, and we're seeing, kind of a ceiling on prices, maybe not necessarily going down, but definitely going horizontal, right? That benefits a buyer. Okay, well then for the buyer, that's still a good market. Okay, and as that transition, and as we start seeing interest rates coming down, we're going to see that transition into, again, buyer advantage, but also then seller advantage. So we're going to go back and forth. It just depends on what demographic that we're going to be discussing and who's going to benefit. So there's always a good market. It's just for which person, is for which group is going to be benefiting. So keep that in mind. And we will go through, again, very unbiased, just going to show you the metrics. You can make your own decision, but definitely keep your mind open, because you'll see these every single week. And we've, since 2007, we've been pretty darn accurate. So let's keep that, we'll just keep that trend going. All right. So as we go through, and as we talk about everything as far as existing home sales, some of the feedback that's happening, a lot of the, hey, homes aren't selling as much. When we come back and we kind of go up to the, not the 60,000 foot mark, but at least the 20, 30,000 foot mark, you can see our trends here as far as number of homes that are sold. And we're looking at, kind of our changes. And you see that, hey, you know what? We're right on target. We're right where we should be. We're not seeing anything horrific. No, we're not seeing massive shifts in numbers, but we're not seeing horrible numbers. And in fact, Redfin, not often do we agree, but we happen to agree on this one. And Redfin says, hey man, 2025, that's going to be absolutely fabulous for home buyers. Why? Because, well, we have seen our inventory increase. Interest rates are technically below 7%, but definitely very close to it, which has been a little bit of a pullback. We've been seeing a little bit of an issue when it comes to kind of economic confidence. But hey, man, all I have to say is if you are a buyer and you're sitting on the sidelines, you should stop, because right now you have more options available to you today than you've had in the last 3-4 years. And that is a huge benefit for you. There are some areas that are showing definitely signs of being sluggish. Okay. There are other areas we're still seeing multiple offers. Okay. And they're not in the areas that you would normally expect, which is super interesting. All right. So when we pop over and we take a look at some of the comments, like what we see from Lending Tree here. So Lending Tree said they did an analysis based on vacancy rates, household unit approvals, home to value income ratios, and which areas are in crisis. And it's super funny because Portland, Oregon is number one. And then we've got Connecticut that's over there. And then, of course, we have Boise, Idaho's technically number two. Spokane, that hit number 4. Now, what's super interesting, I'm not sure if they lump Seattle and the east side into one. They're down at number 21. And, you know, a lot of our issue is affordability, and that's because our values continue to see an upward trend. We'll go through that momentarily. And then as we go through and we take a look at some of the comments, it says, with housing inventory levels reaching 5-year highs, home buyers in nearly every region of the country are in a better position to negotiate more favorable terms. That's from Lawrence Yun, who's the chief economist at the National Association of Realtors. Super smart guy, great guy, very humble. Had an opportunity to meet with him. He's super awesome. Then we have Nora Douglas. She says, she's a home buyer. Nora Douglas isn't the only one feeling optimistic about the housing market as it tilts away from sellers and towards buyers in many parts of the U.S. Homes are taking longer to sell and inventory is rising quickly. I don't know about quickly, but giving buyers in some markets plenty of choices for the first time in years. And I agree with that. And again, when we talk about the glass being half full, there are definitely opportunities for buyers. If you've been saying, oh gosh, haven't been able to buy a house, or it's just not, just multiple offers. Hey, look, it is bunk, hitting you right in the head right now. It is a great time for you to be out there. Rates, they bopped it down again into the lower 7s. We're going to go over some of that. Be open-minded, okay? Great opportunity, and just keep that in mind. All right, let's hit some of our media here. It says, pending home sales slip, but the broader story remains still the same. And what we're going to do is we're going to talk about that and how our market is doing. Home prices falling or growing less quickly. I would say growing less quickly. We're only seeing modest, adjustments. As you can see, we're just below, and I did say just below, at 6.95. That was par pricing on Friday. Mortgage rates moved back under 7%. That was, again, a Friday, and a lot of that had to do with some of the tariff changes that were happening. And again, the legal battle with the administration and the courts. And so the metrics that came out on Wednesday that people were looking at, they weren't that great. And with the tariffs, the bonds actually started to rally a little bit better. And yes, I said the bonds, not the Fed. Feds don't control mortgage rates. They only control car loans, credit cards, and then home equity line of credits, HELOCs, or a second mortgage if they're not fixed. And then, of course, commercial lending and what banks lend to each other. The Feds change their rate once every 6 weeks. Okay? They change their rates once every 6 weeks when they meet. Mortgage rates, as you know, go up and down many times a day because, like the stock market, they are on the stock market. Just remember that. All right. So when we talk about what's going on with rates and we take a look at our friend Freddie and Fannie looking like they may very well become independent again, you can see that we were in an upward trend, albeit we came down just a tiny little bit, but they've been in an upward trend for a little bit. We are still below 7. And yes, we are expecting rates to come down in the middle of Q3, Q4, somewhere in there. Our spring market did not, like a lot of places across the United States, didn't take off kind of as expected. It's kind of like one of those fireworks that kind of fizzles and goes poof. That was it. It's not one of those great big wondrous explosions, unfortunately. But on the flip side, for buyers, especially home first-time buyers, 34% of the market right now instead of 28. Well, they're really benefiting from that. And so keep that in mind. In fact, I know this seems shocking, but my nephew actually said, hey, I've been thinking about this, certain idea. And we started noodling on that one. And I said, actually, that's a fabulous idea, right? I am, don't take this the wrong way, shocked that you came to me with this. And he kind of laughed and he's like, yeah, I've been kind of listening to you. And I thought, I wonder if I got smarter in the last 30 days. But anyway, nonetheless, it is amazing when, people that we help raise think that we actually are smarter than they thought we were before. Anyway, just saying. All right, so let's move on. Let's talk a little bit about our market. So days on market, super funny. So when we take a look at this, the lowest chart there, you know what? We are only 3 days off from where we were at this time last year. So when people talk about being on market longer, that's super interesting because, well, we're only 3 days more than what we were last year. And yes, that ebbs and flows. It was up as high as 11, and then it dropped down below, and then it's back at 3. Our average, so far has been 40 days year to date. It's a little bit. I think it was 38 last year at this time. So again, we're not talking about monumental differences here, and actually quite small differences. When we take a look at percentage of list price, last year at this time for this month of May, we were at 101%, 100% average year to date. And we're now at 99%. So again, just to be clear for folks, when we talk about list to sales price, I'm going to use $100,000. Again, it's super easy. All right. If we have a home listed at $100,000 and we sell at 100%, that means we sold at $100,000. Now, if we sell at 99%, which is what we're trending right now, we would have a home listed at $100,000. We would sell at $99,000. That would be our 1% difference. So it's a very small number. Even as we grow into the $1 million price range, we're only still talking about 1%. That's $10,000. You may say, George, that's a lot of money. Not at $1 million, it's not. That's not far off from somebody's payment after taxes and insurance. Anyway, so keeping that in mind, everything is in perspective. But let's take a look at our 7-day running average. Now, yesterday being Friday, we did get our massive bump. We went up 500 homes on Friday. Again, as I was working with some of our clients, there were over 85 homes we had to go through and we manually vet to send out to our clients. And I'll tell you, when I see those numbers, I go, oh my gosh, that's awesome on one side, but holy moly, because it takes a while to go through those to filter out what's a good option for our clients and which is not. On the flip side, think about it. Now I have more options. Before it was super slim picking. Hey, there's one for that client. Oh, there's none for this one. Oh, there's one for that one. Now I had, 5 for one, 6 for another. There was one client that had, I think, 11. And that's super awesome as you're going through and you're looking at those homes and those numbers for your clients. And they're like, oh, gosh, there was a lot of homes that came out. Yes, there are more homes. But when we get back to this chart, note, hey, look, we took 1,060 of those off. So it's not like we're sitting back and looking at super low pended numbers. So for, 1,348 that came on market, we had 1,060 or almost 1,100 homes that went off market. Now, we did see 805 price reductions, which is really good. That gives us some really good trending numbers because now we're starting to see people adjust to this, I would say, again, more flatter market, not necessarily going down, but sellers are becoming a little more realistic because they're understanding buyers, super, super smart. Buyers, sometimes we have better conversations with our clients about home values today than I've ever had in the past because of all of the metrics that are out there, which is super awesome, right? Okay, so as we roll through, let's talk a little bit about what's happening year over year. Let's take a look where the tires hit the pavement. Now remember, this is May 31st, so we're looking at numbers of May 30th. And the center chart here is the month over month, year over year. And as you can see, we are now in the positive for not only pended, which is now up 12.6%, which a couple of weeks ago we were like negative numbers into the 11 and 12% the other way. And we're up 1.3% on the number of homes that have closed. So the numbers that we are seeing even for this month are doing super well. We're going to get into some of the pricing so that it gives you guys a little more perspective. So when we take a look at year to date, look at that. Whoop, actually, you know what? Let me blow this up for you guys. There we go. We look at year to date up the top chart there. Look, we're up almost 3% as far as sold homes that have closed year over year. So our sales are not falling off. They are better than last year. Pended, we're up 3.8%. Again, we're up, basically about 1,000 homes from where we were at last year. And that is a big deal because everybody's saying pendeds are sliding, pendeds are sliding. Our pendeds aren't sliding. Our pendeds they're not going crazy off the chart, but we're definitely going horizontal. We're staying in the green, as they say. So if we were to actually then take a look at actual sales price, market times, things like that, we blow this up. Here we go. So active homes on market, average price is up almost 2%. Okay. Both month to month and year over year. Solds. Now, if we were sliding, we would see a different perspective. We're up $8,000 for the average sales price over last week. So we're only down 1.7%. Basically, when you take a look at the two, we're talking about a 15% difference or a $15,000 difference of the average home sold this month over this time last year. When we take a look at the year to date, however, look, we're up $8,000. So we took, a swing the other way. Now, when we take a look then at new construction has been doing very well. And funny enough, so 3 weeks ago, we were suffering pretty hard on new construction, but they did a great job catching up. They were 34% off from sales. They are now almost in the green. It is that was quite a little transformation. They made a huge comeback, and a lot of that were going to be incentives, par pricing. We've got some new construction projects out there with homes that are finished, and they're offering 2-1 buy downs with start rates at 4.6%. That is a big deal. Now, when we look at those numbers, you think, oh my gosh, George, oh my gosh, we are 40% more inventory than what we had last year at this time. 713 homes is all. That's across Washington State. Now, that's a marginal number, more than what we would like to see, but we've also been dealing with very small numbers. So any shift in that is going to be bigger. Production has slowed down. Okay, well, that's normal. Why? As there are more resale homes available for buyers out there, builders have a lot more competition, so they have to be more creative. They'll slow down that production, slow down those holding costs. They will keep that incomplete home a little incomplete a little bit longer, meaning maybe they won't put carpet in it, which means it's incomplete, and it doesn't adversely affect our numbers. Now, or their numbers, I should say. Here's the thing. If builders are offering really great incentives, why wouldn't you go out and take a look at that? If rate is a big concern for you, mortgage rate that is, they're willing to offset that along with some other incentives. Keep that in mind. Remember, a mind is like a parachute. It only works when it's open. Keep your mind open. All right. Get back on tack here. All right. When we take a look at year to date, let me blow these up for you again. We take a look at year to date. Our numbers are negligible as far as being off. It says, oh gosh, we're down almost 11%. Yeah, but that's only like, 350 homes, 400 homes. I mean, it's not much, right? When we take a look at pended are down. Okay, so pended are down a little bit, about 800, but they'll start making up some ground, and month end is always really huge. So come tomorrow, we'll start getting some of those month of May metrics, not April, but May. And when we talk about pricing, this is super important because when we take a look at the average sold price is actually up 1.5%, right? If you look at it, it's $14,000 because $947,000 for an average sales price for new construction is almost crazy, right? When we take a look at it, we're definitely up year over year. And those are just really good, solid numbers. Again, we look at these every single week, so you get to see those shifts. And as you're seeing, we're not bad. We are actually quite good. We are very flat, and flat is in a business growth. If you're flat, yeah, you're kind of going backwards a little bit, but not horribly so. We are flat, and we're flat and sometimes trending just a little bit higher. But keep that in mind. And again, that glass is definitely half full for a lot of folks out there. And that's my 2 cents. Anyway, that's probably all it's worth. Let's talk about bank-owned homes. Again, bank-owned homes, super, super boring, right? As you can see, we just don't have much inventory, which is a good thing here. Now, for investors, sure, they want something a little bit more exciting. Here, this works out really well. When we take a look at the center chart here for, month over month, year over year, look at that, 88.2%. You go, wow, that's amazing. That's 15 homes. It's peanuts. So, and 6 of those aren't even bank-owned homes. They're they weren't published correctly. Yes, we do reach out to them. Yes, we try and make the information better, make our industry better. Sometimes, they just don't listen. But when you take a look at the year-to-date, all positive numbers, okay? What's coming on market is going off market. We're not seeing anything crazy out there at all. So at the end of the day, is our market crashing? No. Is that chart, is that little thing going from seller side more to center, maybe a little bit to buyer side? Yes, we are definitely dead nut center and maybe just a teensy weensy little bit on the buyer side. Not horribly so. There's just a lot of great opportunities out there. Make sure that you're out there. There's a bunch of open houses today. Get out, start looking, get pre-approved. If you need some recommendations, just let us know. We'll fire off 3 vetted lenders that you can use. There's no strings attached. Just, make sure that you're getting best pricing, best programs. In the meantime, smash that subscribe button. Let us know that you like it. Leave all your comments below. If you disagree with what you're seeing here, let me know, but give me some proof too. Don't just make some blanket statement. Give us some proof, and let's talk about it. We love to be intellectual with a lot of people, run through the metrics, and if you have questions, ask. Again, no strings attached. It's going to be a beautiful weekend. You guys have an absolutely great day. I will see you on the next video. Take care.